There's this one number that's got the whole financial world buzzing, $6,300. That's the price some experts are predicting for a single ounce of gold by 2026. Welcome to The Explainer, where today we're going to decode why this isn't just about a shiny metal, it's really a forecast for a massive shift in global power.
All right, let's jump right in with that number, because it's a forecast that is making everyone, and I mean everyone, from central bankers to individual investors, sit up and pay very close attention.
So here it is, $6,300 an ounce. That's JP Morgan's bold call for where gold is headed by the end of 2026. Now, just to put that into perspective, that is a huge leap from where we are today. And you know, a surge like that, it doesn't just happen out of nowhere. It's a sign that some really powerful forces are at work.
Okay, so when you see a number like that, the first thing you have to ask is why? What in the world is driving this? Because let's be clear, this isn't just some random blip in the market.
Well, the short answer is just a massive, non-stop increase in demand. But the really interesting part? It's who's doing all the buying.
And this is really the heart of it. We're not just talking about hedge funds or a few wealthy individuals here. We are talking about the big players, the institutions that manage the economies of entire countries. Yep, central banks. And they're buying, along with a huge wave of private investors. Everybody is flocking to gold. And that, right there, is a powerful signal that the very ground beneath our feet is starting to shift.
And you can see here, the demand is just off the charts from both sides. You've got governments trying to shore up their reserves, and at the exact same time, you have regular investors trying to protect their savings. And they're all looking for the exact same thing: a safe haven, a place to park their wealth in what feels like a very uncertain world.
I mean, the sheer scale of this is kind of hard to wrap your head around. JP Morgan is predicting that central banks alone are going to snap up 800 metric tons of gold in 2026. That is an enormous amount of physical gold being taken off the market and locked away in national vaults. But listen to the way the analysts talk about this. They're not calling it a short-term fad. They see it as a fundamental, structural shift in how global finance works. And that just brings up an even bigger question, right? Why now? What's so different about this moment? All right, to really get what's going on, we have to pull the camera back. We need to zoom out from the day-to-day market chatter and look at the massive geopolitical and technological shifts that are completely reshaping our world. And JP Morgan's big 2026 Outlook report really nails this idea. They call our current era a new frontier, a time that's defined by this collision of incredible promise on one hand and intense pressure on the other. They basically say there are three huge, interconnected forces at play. You've got the AI revolution, which is creating these unbelievable opportunities. But at the same time, the old global order, it's fracturing into competing groups. And then there's persistent inflation, which is just eating away at the value of money. And the key thing to remember is, these aren't separate trends. They're all tangled up, feeding into each other. Okay, so let's dig into the pressure side of things first. Two of these forces, that global fragmentation and sticky inflation, are creating the absolute perfect storm for a gold rally. You know, that whole era of super efficient, seamless globalization that gave us cheap stuff and low, stable prices, well, that's over. We've walked into a totally new world, a world of competing economic blocks, where supply chains aren't built just for efficiency anymore. They're built for security, for resilience. And that resilience, it comes with a price tag, higher and way more unpredictable inflation.
So with all this tension and inflation you can't predict, it creates a really basic problem. Where do you put your money? When the usual safe bets like currencies and bonds start to feel risky, people naturally start looking for something else, something tangible. And for what, thousands of years? That something else has been gold. It's the ultimate insurance policy against uncertainty.
So here's the bottom line. That $6,300 forecast, it's not just some number they pulled out of a hat. You can think of it like a barometer, measuring the rising economic and geopolitical pressure in our world. Okay, so that's the pressure side of this new frontier. But what about the promise? Well, that brings us to the third massive force that's changing everything, the AI revolution. Now, you might be thinking, what does the AI boom have to do with gold? Well, while it might not be directly driving people to buy gold, it's a huge piece of this new frontier puzzle. Its explosive growth is creating incredible wealth, but it's also stoking fears of a classic tech bubble, which just adds another layer of volatility and, you guessed it, uncertainty to the global economy. So the million-dollar question, are we in an AI bubble? Well, JP Morgan actually has a 5-point checklist for this. And while they see some of the ingredients, building speculation and all that, they point to a really key difference from past bubbles. Look at point 2 here. This whole boom isn't really being fueled by cheap credit or a bunch of debt. It's being paid for with actual cash from some incredibly profitable companies. So for now, it seems like the mind-blowing earnings are justifying these massive valuations.
In fact, the report basically says that AI's potential to change the world is so huge, so transformational, that for investors, the biggest risk isn't getting caught in a bubble. It's not having any exposure at all. It's about getting left behind.
Okay, so let's take a step back and pull all these threads together. We've got the pressure of a fracturing world on one side and the incredible promise of a technological revolution on the other. What does it all mean when you put it all together?
We started this whole thing with just one number, that forecast for gold. But as we've peeled back the layers, we can see it's really just the tip of the iceberg. It's a symptom of a global economy being pulled in two totally different directions at once. On one hand, you have this retreat to the safety of hard assets like gold because of all the geopolitical pressure. And on the other, you have this mad dash towards the enormous promise and risk of the AI revolution.
And it's just a perfect example of how a single price target can tell a much, much bigger story. That number isn't just about gold. It's a symbol of a world that is grappling with huge risks, the need for resilience, and a technological revolution all happening at the exact same time.
And that really leaves all of us with a huge question to chew on. In this new frontier, this new world of intense pressure and unbelievable opportunity, how do you balance risk and reward? How do you balance that search for safety with the need to lean into the future?
It kind of feels like we're all that lone sailor, doesn't it? Trying to navigate between the storms of uncertainty and the powerful winds of change. Finding the right course. Well, that's the challenge for every single one of us.